This video is created by Jagrat Creation for the students who are reading for single entry conversion method, and that's why it is useful to the students who are reading for CA-IPCC, Inter CA, F.Y.BCom, and professional courses like CS, ICWAI, and it is also useful to the students who are reading for 11th Commerce who has got single entry conversion method as a part of their syllabus. I want to solve one sum here before you on conversion method. Just observe the sum on the screen. I would like to solve this sum here before you. Here you are given the various transactions. Cash balance 9,700, and here cash and bank balance you are given 23,300. So 23,300 and 9,700. You can bifurcate between cash balance and bank balance on the basis of this information. These are the various transactions given to you. Here you are given the balances. You are not given opening statement of affairs, so you are required to prepare opening statement of affairs. You are not given cash account and bank account, so you are required to prepare cash and bank account. Over and above, you are required to prepare debtors account, expense account, creditors account. All other accounts are required to be prepared to find out the missing information. Let me start with that. So these are the various accounts that I have prepared. Balance sheet, debtors, creditors, cash, expense, trading, profit and loss account, balance sheet. I am also going to prepare bank account because this is a cash account and cash and bank balance is given to me combined. So let me start now. So these are the transactions given to me. The first transaction given to me is discount received 900. So discount received 900 is an income. Incomes are credited to profit and loss account. So this discount received 900 will be credited to profit and loss account. When I get discount? When I go to the creditors for payment. So when I go to the creditors or suppliers for payment, I get a concession. So to that extent, I am required to pay less to the creditors. And as I am required to pay less to the creditors, creditors account is to be debited for discount received. So entry for that creditors account debit, I will credit profit and loss account with 900 rupees in this fashion. Expenses paid in cash. So this is the expense account, this is cash account. When you pay the expenses, expenses are debited, expense account debit to cash account. So expense account debit to cash account credit. Second transaction. Bad debts written off. Bad debt is a loss. Expenses and losses are debited, so bad debts account is to be debited. This loss is debited ultimately to the debit side of profit and loss account. So I will debit this bad debts to the debit side of profit and loss account. And to that extent, I don't receive money from the debtors. So debtors balance decline. So debtors account gets credited. So the journal entry for bad debts, profit and loss account is debited and debtors account is credited. Now cash withdrawn from bank. Cash withdrawn from bank. Cash account debit to bank account credit. So I'll prepare here bank account. Cash account debit to bank account credit. This is a contra entry actually. After that, cash withdrawn from bank, expenses paid by check. So expenses are paid. So expense account debit, check is given, bank account credit. So expense account debit to bank account credit. Then comes cash received from debtors. Cash received from debtors. Cash is received, cash account debit. Debtors are the giver, credit the giver. So cash account debit to debtors account credit. Then comes cash paid into the bank. Cash paid into the bank. Bank is the receiver, debit the receiver, bank account debit to cash account credit. Cash drawings. Owner has withdrawn cash. That is deducted from capital. And cash goes out. So cash account is to be credited. So it will be deducted from capital on the face of balance sheet and cash account is credited for these drawings. Then checks received from debtors. Checks received from debtors presumed to have been deposited in the bank. So bank account debit to debtors account credit. Drawings by check. Owner has withdrawn money by check. So bank account is to be credited and drawings of the owner are deducted from capital. So drawings deducted from capital and bank account is credited for these drawings. This is how these transactions are recorded. Now, these are the other details. Cash balance 9,700. Now, cash balance is given to 9,700. So, cash account credit side, I will write down the closing balance and that I will write on the balance sheet asset side in this fashion. Discount allowed. Discount allowed is an expense loss. Debited to profit and loss account. Discount is allowed to the customers when we receive payment for them. So to that extent, amount received is less. So debtors account is to be credited. So discount allowed, profit and loss account debit, debtors account credit. Paid by check to creditors, creditors account debit to bank account credit. Check is issued. Total sales will be recorded here on the credit side of trading account that will be bifurcated into cash sales and credit sales later stage. Cash purchases debited to trading account. Cash account is credited for the purchases because you are required to make payment, so it will appear on the cash book payment side. Cash paid to creditors, creditors account debit to cash account credit. Creditors are the receiver, debit the receiver, cash goes out, cash account is to be credited for that. Now you are given these balances. Opening balance of debtors, opening balance sheet asset side, debtors account debit side, opening balance. Then opening stock, trading account debit, opening balance sheet asset side. Then cash and bank balance, closing stock, trading account credit side, closing balance sheet asset side. Then comes cash and bank balance that I will record afterwards. I won't write it right now. Plant less depreciation, very important. This is the opening balance sheet of plant. Opening balance sheet, plant will appear here. Plant less depreciation is given to you. Now we have recorded all the transactions wherein there was no transaction for plant purchased or plant sale. That transaction was not there. So here the opening balance is 26,400 and 23,760. The difference between the two may be depreciation. So 26,400 opening balance. Now closing balance is how much? 23,760. The difference between the two should be identified as depreciation. If you deduct opening balance minus closing balance, you will find what amount? 2640, that is 10% of 26,400. So this should be identified as depreciation and it should be debited to profit and loss account. This is a very important understanding that students should hold. Now same principle is to be applied for furniture. Now furniture opening balance will appear on the opening balance sheet asset side. Closing balance of furniture will appear in the closing balance sheet asset side. Difference between these two balances will be identified as depreciation on furniture. So 9,700 minus 5,300, 4,400 depreciation on furniture debited to profit and loss account. Very important point. Creditors opening balance sheet liability side, respective account credit side means creditors account credit side opening balance. Closing balance of creditors debited to creditors account, closing balance sheet liability side. Then expense outstanding at the beginning of the year, that will appear on the balance sheet liability side and that will transfer to expense account. So outstanding expense account debit to expense account credit and it will appear on the opening balance sheet liability side. Closing outstanding expense, closing balance sheet liability side, expense account is debited for that. Expense account debit to closing to outstanding expense account that will appear in the closing balance sheet liability side. This is how these balances given to me are recorded. Now, after I haven't recorded this cash and bank balance, that I want to take care of now. Now this is the closing cash and bank balance combined 23,300. I am given closing cash balance 9,700. So I will get closing bank balance that will appear here as closing bank balance. Now closing bank balance will appear on the balance sheet asset side also. Now after recording these things, I want to bifurcate this opening balance. So total of credit minus total of debit. So this is the opening bank balance that will appear in the opening balance sheet asset side. And from 61,000, 53,300 opening bank balance is deducted, I will get opening cash balance. So cash account debit side opening balance, and that will go to the balance sheet asset side in this fashion. This is how bifurcation is made by me for cash and bank balance that is given to us combined. This is the bifurcation. Now I have recorded all the opening balances. Now I should go for closing the accounts. So far as this opening balance sheet is concerned, the opening capital is missing. So total of credit minus total of debit, I will get the opening capital that will be recorded as closing balance sheet inner column, opening capital. To this capital, profit that I'll find out will be added, drawings will be deducted, closing capital balance will appear in the outer column of the balance sheet. Here bills receivable, bills payable details are not there. Here opening balance is there. Closing balance is not there. Credit sales is not there. In creditors account, opening and closing balance is there. So I can find out the credit purchases from that. From this cash account, I can find out the cash sales. So this is the total of credit side. Total of debit is to be deducted therefrom. So I'll get the missing information, cash sales. Cash sales will be recorded in the trading account credit side. And from 3,43,000, 19,800 will be deducted. You will get the information about the credit sales. So credit sale is 3,23,200, 3,43,000 minus 19,800, 3,23,200 is the credit sale. That will go to the debit side of debtors account. Very important point. Now I can find out the closing balance of debtors. So total of debit minus total of credit. This closing balance will go to the balance sheet asset side. So I have closed 1, 2, 3 and 4. Now expense account will be closed. The difference in expense account will be debited to profit and loss account. This creditors account will be closed and I'll get the credit purchases that will be debited to trading account. Now expense account, total of debit minus total of credit, that will go to the profit and loss account. Now I can find out the gross profit that will be transferred to the credit side of trading account, 56,000. So 3,66,300 minus 36,500 and 2,73,800. This is the gross profit transferred to the credit side of profit and loss account. Now I find out the net profit that is added to capital. So capital plus profit minus drawings, you will get the closing balance of capital. So closing balance of capital is 1,32,030. Now tally the balance sheet. It should agree on both the sides. Here 3 and 3, 6, 5 plus 3, 8, 3 plus 3, 6, 7. So 1,76860. This is how the balance sheet total agrees. While solving the sum, I have also prepared the bank account. Let me show you bank account here for your perusal. I think that you have followed all these details of the sum. This sum is important for the transactions to be recorded in a bifurcated manner for cash and bank balance. For bifurcation of cash and bank balance, that's an important point of this sum. I feel that you have followed all these things. Thanks to all of you.